British Petroleum will be investing $12 billion in gas projects in Egypt's West Nile Delta, along with some of its partners. We'll be keeping a very close eye and diving a little deeper into the details of that particular deal live from Cairo in the next couple of minutes. Welcome to Global Business Africa. Here's what's coming up. Lockdown in Burundi as thousands protest against the high cost of living. We'll tell you this long and the short story of the hair business in Africa, which is worth billions of dollars. Right, the irony of a guy with no hair talking about hair will come in a little later. But right now, let's start with a question of Tullow Oil and its partners who will be investing quite a bit of money in Uganda, well over $14 billion, in fact, developing oil fields in the East African nation. That's according to the company's general manager in Uganda, Jimmy Mugerwa. Now, Tullow is working with Francis Total, China's CNOOC as well, to develop fields which the government estimates hold 6.5 billion barrels of crude. Commercial production may start as early as 2017. The World Bank estimates output could reach up to 200,000 barrels of crude a day by 2020. Now, Mr. Mugerwa estimates that an additional $4 billion will be needed to start building a pipeline that links this landlocked East African nation to global markets and refiners. Uganda first discovered oil about 9 years ago. Last week, it announced that it will be selling its first round of exploration licenses as well. CNOOC was the first company to be issued with a license. Other applications are still pending. Businesses and transport in the Burundian capital of Bujumbura came to a standstill on Thursday after trade union officials, civil society activists and members of the public took to the streets to protest over the rising cost of fuel and mobile phone services.
The protests drew people from all walks of life, from civil servants to trade union officials, all united in protest against the rising cost of living in their country. Burundi's government had to raise taxation to boost revenue after donor funding stopped. Along with the rising cost of fuel and mobile phone usage, consumers feel hard hit by the changes.
We are still waiting to hear on the radio that fuel prices fell internationally, but here at home, we even might not have the fuel at the pumps.
I had the intention to follow the strike, but unfortunately, my children had forced me to take them to school because it's examination time. For this reason, I did not want to frustrate the children.
Despite a government order declaring the one-day strike illegal, protesters ensured public schools, hospitals and most businesses were closed for the day.
Students were concerned about the review of the day on Thursday. Some have managed to get to the independent school, but others found that in a situation where there were no buses, because the majority of students who come to us, especially in the suburbs, move by bus, and with the appeal which was launched by the presidents of the associations of carriers, bus drivers, we do not see them this morning.
Those who came out to march hope the government will now take their demands seriously and address the rising cost of living. Noel Makugu, CCTV.
Back to the oil business, where BP will be investing about $12 billion with its partners as part of a finalized West Nile Delta concession deal in Egypt. The agreement involves developing a field with about 5 trillion cubic feet of gas reserves, about 55 million barrels of condensate reserves too. The supply deal should help Egypt over the medium term as it tackles its worst energy crisis in decades. Rising domestic energy consumption and decreasing output have turned Egypt from being a net energy exporter into a net importer. BP said production from the project may reach up to 1.2 billion cubic feet of natural gas a day. At those levels, that's roughly equal to about a quarter of Egypt's current gas production. Now, the oil firm has a 65% equity stake in the project. Production is set to start in 2017. Let's get the latest details on this project from Yasser Hakim. He's live in the Egyptian capital of Cairo tonight. Yasser, given the sheer amount of money that's being invested here, this deal must be quite the PR coup for Egypt's government, isn't it?
Exactly, and the timing as well. It comes just a week before the the all-important for the government economic conference, donors conference, summit. Have a lot, Egypt's future. They have so many names for it, but at the end, that's where hundreds of companies and businessmen will be in Egypt to try to discuss investment opportunities and the climate here. And this comes at the right time, where the government will probably boast about it during the conference, saying that one big, maybe the largest, $1 foreign direct investment has taken place. Second of all, it comes after you know, the row between the government and the foreign oil companies concerning debt payments that the government has postponed for a year, and there were fears that maybe the oil companies would stop production, but this gives a boost of confidence to the market here that production will continue and the market is growing, especially that also the area where this findings that happen, or the contract in the Western Desert, it will also prove that there are a lot of reserves in this area. There's room for more exploration and more gas reserves, as has been said before. So more investments are expected in this area in the oil and gas production in Egypt. So overall it was a good news for the Egyptian government.
Right, let's get into the details of it though. Walk us through the timelines for this project. We know gas production is targeted to start in 2017. Is all of this going into the domestic gas market, or will some of it eventually end up being exported?
No, after the 2011 unrest and uprising, the production has fallen. Egypt used to be an exporter of gas, but now the local market and the local consumption has increased drastically, and the production is not up to the consumption. So the production will go into the local market, not into the international market, to cover the energy crisis. There's an acute energy crisis in Egypt, and this production will mainly be for the local market.
I understand BP will also be using BG's pipelines to deliver the gas to the market. Do we know what the terms of that deal are?
There's a lot of numbers being thrown around, but I tried to get some confirmation from a vital source within the company, but I could not get something to confirm the numbers I've been tapping. But we know that the investments are huge, and what BG will get is it will get paid for using the pipelines, its pipelines and infrastructure. BG had a crisis as well in the last few years because its infrastructure was based on, and its whole policy was based on exporting gas from Egypt, not local market, whereas BP has gone into the local market more, not giving much attention to export. And this worked with BP at this point. It looks profitable, at the right decision. For BG, it was the other way around. Exports have fallen, and its infrastructure and pipelines were idle. So a deal with BP now would be good for BG at any cost, knowing that in the last few years there was a lot of expenses to put this infrastructure so that it could help export. Israel is also trying to use these pipelines for importing and exporting with Europe. So BG will stand to gain a lot from this deal after a couple of years where its production has fallen. For Egypt, Egypt is one of the biggest markets. 1/5 of BG's total output around the world production has come from Egypt. 1/5 from Egypt alone. And this fall in the last 3 years has caused a lot of problems for BG.
Indeed, we'll have to leave it there for the time being. That Yasser Hakim live in the Egyptian capital of Cairo. Certainly a story we'll be keeping a very close eye on with regard to FDI flows into North Africa and Egypt in particular. Let's head in the other direction now. Zimbabwe. Its hopes of getting its external debt load rescheduled have been dashed yet again. The IMF and the World Bank have said the country has to clear its existing arrears with the funds before it can be eligible to get any new lending. Now, Zimbabwe has had a recession that's lasted for several years. Its government says international funding is crucial in efforts to getting its economy back on track, as Farai Mokatuya now reports.
Zimbabwe's $8.3 billion debt remains an albatross to full economic recovery. A 5-year economic blueprint requires billions to implement, and so far the country hasn't been able to get the money. Zimbabwe is adhering to an IMF staff-monitored program that is meant to help it reduce expenditure and begin to service its debt. But the results aren't coming fast enough. Plus, over a decade of sanctions have depleted its capacity to get out of the deep hole.
To me, it's almost like a chicken and egg situation. These sanctions are putting constraints in terms of, for example, the way that our industries are operating, the way that even the government itself is operating and so on. And that is where we want to generate income or revenue streams to then be able to pay these debts that we owe the IMF. So if the sanctions then continue and our capacity to then generate the revenue streams that are required is restricted, how then do we come out of it?
Stakeholders agree the only way out is continued negotiations for further concessions or debt forgiveness. And that's exactly what the monetary authorities here have been doing, even asking former foes to come to the rescue.
We have been discussing how the UK can play a role in the resolution of our debt issue, to see whether it can act as champion to spearhead the resolution of the clearance of arrears, especially with the multilateral institutions.
Well, it is crucial for Zimbabwe that its calls do not fall on deaf ears, because both the IMF and World Bank were uncompromising in their message this week, and that is, our hands are tied until you pay up. Farai Mwakutuya, CCTV, Harare, Zimbabwe.
The Johannesburg Stock Exchange is the largest stock exchange across Africa. As it stands, it does continue to be a fairly profitable business. 2014 earnings per share, they're up 25% to 742.4 cents. But there's a new kid on the block. The 4AX Consortium recently announced plans to launch a new exchange, and it's got the JSE right in its crosshairs. Marion Bemard spoke to Nikki Newton-King, Chief Executive of the JSE, about this and other issues affecting their clients.
I'm joined by the CEO of the Johannesburg Stock Exchange, Ms. Nikki Newton-King. Nikki, thank you for joining us. Performance at the Johannesburg Stock Exchange seems to be defying the gloomy picture out of course, South Africa and its economy. What's driving the JSE at this point, in your opinion?
So I think there are two things driving that performance. The first is the fact that we have a range of global competitive clients in our listed space, and it's in those stocks that our investors invest. So you have the likes of the SA breweries, the Anglo-Americans, the Bulletins, the Glencore Extratas that are in our top index, and that therefore are available to trade by our clients. And in trading them, they use world-class trading and clearing technology. And so therefore, we see that activity really driven by attractive range of products and very, very attractive technology.
Now, South Africa has been warned to brace for at least 3 years of unscheduled, interrupted power supply, with a significant impact on the economic performance. And Fitch is now warning of a downgrade. From your position at the JSE, how bad does South Africa's economy look going forward at this point?
So there are a lot of opportunities in this economy, a lot of opportunities for entrepreneurial growth. The reality is that if you want to grow, you do need energy. So the number one issue for the country to resolve is energy certainty. And there is a large amount of the national effort at the top level going into resolving the energy issue. As individual corporates in South Africa, we're all looking at, how do we operate in a lower energy environment without prejudicing our growth opportunities? But we need to solve that. It's not just about actually physically powering our growth stories, but also about what it does to the national psyche. The good news is that there are a lot of very constructive conversations between business and government about public-private partnerships to resolve this. And so I think we've got to continue that effort to work together to resolve the issue.
The European Central Bank will be starting its bond buying program next week. What impact do you expect this to have on the JSE?
So Europe is a major trading partner with South Africa. So as soon as our trading partners are able to trade more, that has a big impact on our clients. And of course, when our clients do better, so the opportunity to trade in those clients is attractive then for investors. But it very much depends on how our clients are affected at a detailed level by what's happening in Europe, and they will all be affected differently.
And, you know, plans for the establishment of an alternative stock exchange very much on the go for Africa exchange, looking to the advance. How much of a threat is this, in your opinion, to the JSE?
So we may be the temporary sole provider of a bricks and mortar exchange in this continent. We compete in this country. We compete vigorously across our product range. If other entities are looking for licenses, we look forward to the opportunity to compete. It is difficult to operate a well-functioning, well-regulated, and trusted marketplace.
Nikki, thank you very much for joining us.
Let's make a quick run through the markets here for you, starting perhaps with the JSE, relatively flat in trading earlier today, ending just about 0.05 percentage points lower. The NSE 20 share index in Nairobi relatively flat. Nigeria, however, fairly interesting numbers coming through from there, up 200 basis points. Keep in mind, however, the Nairobi Securities Exchange is working on setting up a derivatives trading unit. It's currently in testing and beta right now. A couple of banks are participating as well. We are jumping into the car world next. GM wants to get some sales in Uganda. We'll tell you how. And Egypt has a problem, not one of investments, but now one of labor as well. We'll be back in Cairo shortly. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
Global Business, weekdays at this time on CCTV Africa.
This report by the African Green Revolution Alliance says climate change will slash food output. Within the next 30 years, the number of malnourished people in sub-Saharan Africa could jump nearly 40%.
"17 minutes into the hour, you're still watching Global Business Africa. Let's take you to the General Motors East African subsidiary. It's expanded into Uganda. The car dealer is a global distributor for the Chevrolet and the Opel brands, and it's now joining the list of other major car brands in Uganda, all of which are seeking to capitalize on developments in infrastructure and a rise in disposable income. Michael Baleke has more.
Uganda has recently scaled up investment in public infrastructure, particularly roads and electricity. General Motors says due to such projects, more than 4,000 brand new vehicles were sold in the local market in 2014. And General Motors believes economic growth in Uganda offers much opportunity.
There's going to be a lot of demand for services, and we are banking quite aggressively on the opportunities that are emerging in East Africa as far as mineral exploration is concerned.
General Motors aims to expand its offer in Uganda with Chevrolet and Isuzu brand passenger SUV and commercial vehicles. The car maker hopes to provide business opportunities for local suppliers for services and consumables, create jobs, and also provide a cost-effective and reliable means of transport.
This vehicle is a complete reflection of quality and durability. It's a complete reflection of low cost of maintenance. That means cost per kilometer of running is very, very low. And he can run the vehicle for many, many years and earn from it his daily living.
However, General Motors East Africa comes into a market dominated by mostly second-hand vehicles. Uganda's revenue body indicates that the importation of second-hand vehicles rose by over 12,000 units last year. Considering that most Ugandans are low-income earners and can hardly afford a brand new car, changing their choice for new overused vehicles could be a challenge.
Well, in the current population that we have, I think it's about 2% people who can afford the new cars. Mostly the new cars are meant for the organizations and big institutions like hospitals, and you even find schools do buy old cars. So really our market is not yet ready.
Mark East Africa a subsidiary of General Motors, will run the franchise in Uganda. The automobile company has led in the new vehicle segment in the region for 3 successive years, achieving a market share of 27% in 2014. Michael Baleke, CCTV, Kampala.
Egypt is facing a fresh challenge in its efforts to rebuild its economy after the revolution took place in 2011. Foreign investments are starting to flow back, as you saw earlier in the bulletin, in the years following that political turmoil. But the country is struggling still to find the skilled labour needed to put all that capital to work. Yasser Hakim has more on what's hot tonight.
Egypt used to pride itself for having the most professional labour force in the Middle East. Now, however, the largest sectors in the economy, such as the real estate, cannot find the proper, well-trained labour force.
There has been a brain drain. The best have left to the Gulf or Europe, and the upcoming generations are not up to the same standard or quality as they have not received the proper training.
The 3 years of unrest have hit the tourism industry hard. It constitutes 20% of the total labour force. Well-trained and experienced workers in the tourism industry have either left the country or worked in other fields. As tourism regains its momentum, the quality of the employees now is not the same. Ironically, there's over 13% of unemployment rate in Egypt, yet many businessmen are not able to fill their job vacancies. Some companies have been established to address this issue.
We want to build a new generation that is well educated and nurtured to provide the high quality service for customers. This will open wider doors for new investments.
But this covers only a small number of employees. The government has nearly 100 training centers. They have not been properly used so far.
The return on investment, or if I go for training, how much are they going to pay me? And how am I going to live when I go to the training center if I'm outside the location of the training center? It's a matter of finance, nothing more.
Analysts are calling for the educational system as well to help solve this major issue, as it has a role in preparing students for the labor market.
We train students in factories during college so that they have experience when they graduate. There must be information given from each industry about their vacancies so we can provide it with its needs. There must be a link between us both. If this works, all problems will be solved.
There are over 3.5 million unemployed in Egypt. Analysts say the solution is not just in providing jobs, but to train the youth on the jobs that are needed in the market. Yasser Hakim for CCTV, Cairo.
Right, then a quick run through commodity prices here. Not much of a change today, except a lot of red ink on the day. Crude prices heading south, gold as well, cocoa also in quite a bit of a rout. Gold down by about 2 percentage points there to about 11.74 per troy ounce. Up next, we'll bring you the long and the short, or the none, of the hair business in Africa. It's worth $6 billion, though, so it's worth paying attention to. All that and more is coming up. Right, welcome back. Now, if you've got any hair jokes, please insert them here. The business of hair has always been very, very big on the continent. The African hair market by itself is estimated to be worth $6 billion. That's quite a bit of money. Now, even though not new, the black hair industry is growing extremely fast. Women all over the world are spending millions annually on hair extensions, hair care products. The US is still the largest market for that sort of thing, but African countries, Nigeria, South Africa, Kenya, they're all catching up as major importers. Countries like India and China are now becoming major hair exporters too. Sumitra Naidu ventured around Johannesburg to get the long and the short of this industry for Grassroots tonight.
The African hair market is made up of 2 categories, wet hair and dry hair. According to research, over $1 billion was spent in 2014 on wet hair products, which includes shampoos, conditioners and relaxers. The dry hair industry in Africa, which includes weaves, wigs and extensions, is currently raking in an estimated $6 billion.
If she brings her own hair, like the kind of braiding which I'm doing, like she's going to bring 450 just for my labor. But if it's for everything, it's going to be 620.
South Africa, Nigeria and Cameroon have the biggest hair markets in Africa. The demand for better quality hair is growing as women become modern and financially independent. A simple weave can cost around $30, but some women pay up to $450 for just one hairpiece, depending on the type and quality of the hair. So South African salons are importing hair from all over the world. This piece of hair comes from China. You also get synthetic made hair, and this one comes from Mozambique. You get the more expensive hair like this one coming from Peru. This would cost around $320 a piece. Hair coming from India remains one of the most expensive. This is called virgin hair and it's not mixed with anything. This retails for around $450 a piece.
Like with braids, normally we have expression braid. It's a hot water braid. And then we've got Brazilian hair on weave. Yes, and Malaysian, Peruvian, those are the things like nowadays people are doing most. The one that they buy most is Jordan Nature, because they like it because it's 100% human hair and chocolate. But as for ebony, it's just few people who buy it.
African hair salons are significant importers of dry and wet hair products. India and China remain the largest exporters of dry hair products.
Some of the hairpieces we stock it locally, then some of the hair we go to Brazil and Nigeria. That's where we stock our hairpieces. My suppliers, some they're from Nigeria, and then the other ones from here, and then other ones also Kenya and Zimbabwe.
African women are enjoying the freedom and versatility that synthetic hair gives them, because they can change hairstyles more frequently, as hair is an important aspect of black female culture. It's not surprising that they are willing to pay top dollar.
I think I change my hair almost once a month or every second month. So if I'm doing braids, like 600 rands, and then if I'm doing like plaiting with my own hair or just relaxing, it's like somewhere under 300.
Synthetic hair offers a larger pool of hairstyle options when used correctly.
I prefer braiding my hair most of the time. It prevents my hair from breaking most of the time, and I don't know, it's easier to manage.
The ability to choose what I want to do with my hair. It's not necessarily that I don't like my natural hair, I have options.
While this rapidly growing industry provides more access and choice for women, it's also creating jobs and new entrepreneurship opportunities. Hair salons can be found on every corner. Many have become mobile. You can even have your hair done down the street. Sumitra Naidu, CCTV, Johannesburg.
You know, as much as I can complain about artificial hair or extensions and that sort of thing, you can't deny the profit motive and the benefits of that business does deliver in general. Quick run through the markets here for you as far as currencies are concerned. Some really rough numbers coming through for the rand, down to a 13-year low. US jobs data essentially reinforcing the perception that a rate hike from the United States by the Fed will be coming sooner rather than later. And that, of course, has ripple effect right across the board. Emerging market currencies getting absolutely hammered out there today. Now, that's it for this edition of Global Business Africa. As usual, we like hearing what you think about what we do around here. globalbusinessafrica@cctv.com is an email address to use. And of course, when we're not on air, Facebook and Twitter are your ports of call.